move over to the housing market. Pending home sales rose 2.2% month over month in November, hitting a 21-month high and the fourth straight month of increases. Could this be an early sign that the housing market is finally going to unstick in 2025? Joining us to answer that and more, we've got Logan Mohtashami, HousingWire's lead analyst. Logan, great to speak with you here. It's really interesting to me seeing just the degree of the uptick in housing market activity and pending home sales, specifically in the month of November. Is this a sign to you that buyers are finally capitulating to the Fed? They're not going to wait anymore for rates to come down?
It's been a really interesting second half of the year because when mortgage rates started to head towards 6%, we had about 18 weeks of positive purchase application data. And then our weekly pending contracts data has been positive year over year versus 2022 and 2023 data since October. So we're working from the lowest bar ever, so it doesn't take much to move the needle. But I think what surprised everyone is November and December rates were going up and purchase application data was still positive. I just think we have a very, very low bar of sales to work from, a little bit of seasonality coming in here, but it shows us that if rates just get towards 6%, you could get demand growth easily in 2025.
So what is going to be the single biggest driver of relief for potential home buyers in 2025?
You know, the economy softening up, the labor market softening up. If the unemployment rate starts to tick up higher than what the Fed is going to be comfortable with, that can take the 10-year yield lower. That's your best relief right now. The one positive for 2025 that wasn't the case the last few years is that mortgage spreads have gotten better too. So you don't need too much help from the 10-year yield, but you do need probably the economy to slow down just a little bit, just to get rates down towards 6%. And then you could get growth from these record low levels of sales.
And talk to me about also what you're anticipating in terms of just when buyers should really get into this market. If you're someone listening to this conversation and you've been wanting to buy a home, but you've been waiting for those lower rates, when is the time to buy?
I generally think the last few years, we've seen November and December be kind of the seasonal demand in purchase application data getting ready for spring. So I think we've already seen some of that happen already. But again, for everyone, it's the total cost of housing. Where do you live right now? Can you even qualify for a home? Housing affordability is still very terrible out there. So there's just a certain type of home buyer that could still buy. Most sellers are home buyers. In 2024, new listings data did grow. That's a positive. If we continue that trend, we could get some more traction, and active inventory is up in 2024. It's not back to normal, but these are positives for the housing market. Also, price growth cooled down in 2024 as well. So there's a lot of things that could get us to grow sales. It just needs the 10-year yield to go lower and mortgage rates just to go lower. And I think the pool of buyers pick up in that scenario.
We've seen the bond market, though, being particularly violent over the last couple of months, Logan, and certainly over the last year here. If we don't get relief in the 10-year, how does that impact home buyers?
I just think the existing home sales hovers around this 4 million level. It's been really rare after 1996 to have the existing home sales move below 4 million. But now, we don't have underwater mortgages. We don't have credit delinquencies in housing. We don't have credit stop flowing like we did after 2008. We have a lot of homeowners that are doing well, but it does require rates to come down. Every single time mortgage rates have head towards 6%, purchase application data grows, even with the home price gains that we've seen. So to me, it's just an affordability issue. We have good demographics here. There's a lot of selling equity. It's just an affordability thing. This reminds me a lot of the early 1980s when affordability was actually worse back then, but mortgage rates started to go down lower. There was an early recession in the early 1980s that boosted mortgage rates to go lower. That picked up demand noticeably back then, even though affordability was worse and we had actually more active inventory back then.
All right, Logan, we got to leave it there. Thank you so much for your time. Appreciate it.